Hello and welcome to traders and investors. I'm glad to present you the daily market review prepared by analysts and experts from fx.co portal. Here we go. Today is January 29 and we're starting from euro-dollar pair with Dimitrios Tzipras. Early in the European session, EURUSD is trading around 1.0841 with a slightly bearish bias and with a gap after opening of negotiations this week. In the next few hours, the euro is expected to cover this gap and reach 1.0864, a level that coincides with the top of the bearish trend channel forming since December 19. The euro has found strong support around 1.0826 and 0820. This area offered a strong technical bounce to the euro on January 23 and January 25. If the euro falls and bounces around this level in the next few hours, it could be considered an opportunity to buy. Additionally, if the euro covers the gap and the next few hours that it left around 1.0854, it could be seen as an opportunity to sell. Only in case EURUSD meets strong resistance around 1.0864, 1/8 mirror level. If the euro breaks sharply the downtrend channel forming since December 19, the instrument could find other resistance around the 200 EMA and around the top of the secondary downtrend channel formed since December 27. Eventually, EURUSD could reach 1.0915. In case there is a daily close and consolidation above 1.0920, the euro could start a new bullish cycle and could reach 2/8 Muri at 1.0986, around the psychological level of 1.10, and finally could approach 3/8 Muri level at 1.1108. On the contrary, a daily close below 1.0820 could open the door to the bearish cycle. So the euro could reach the level of 1.0742, 0.8 mirror level, and could reach the bottom of the downtrend channel around 1.0690. The market sentiment report shows that there are 54.35% of traders who are buying euros. This signal indicates that the euro could continue its weakness in the coming days. As the statistics are almost balanced, the euro will likely consolidate in the coming days above 1.0800. The next stage of our review is the next major. It's time for GBPUSD, presented by Laurie Bailey. On Friday, after a slight break of the upper shadow of the target at 1.2745, the price settled below the balance indicator line. In anticipation of the Federal Reserve and Bank of England meetings, this factor can hardly be considered as an intention to reach the target support at 1.2610. Most likely, this confirms the market's inability to push through 1.2745, and therefore we expect the continuation of sideways movement until Wednesday when the Fed announced its decision. The Marlin oscillator, whose signal line is moving horizontally under the zero line, also tells us about it. On the 4-hour chart, the price is stuck at the intersections of the balance and MACD indicator lines, and the signal line of the Marlin oscillator is moving within the range around the zero line. The price is clearly in waiting mode, and so are we. The pair is following a bullish scenario with the upper boundary of the price channel target around 1.2878 mark. What about cross-currency pair? It's time for CADCHF, Area Magmar describes. If we look at the daily chart of the CAD-CHF currency pair, it's clear that the price movement is moving below the moving average, and the appearance of the hidden deviation pattern between the price movement and the stochastic oscillator indicator, coupled with the confirmation of the emergence of the ascending broadening wedge pattern. Based on these facts, within a few days, in the future, CAD-CHF has the potential to continue its weakening, even though there is potential for it to be corrected upwards. But as long as the correction does not exceed above the 0.6510, CAD-CHF will fall down to the 0.6300 level. That's all for today. See you online soon and good luck.